Hola, hola, hola. Welcome to Mastering the Sweeps, a Nueva Voz trading series where we apply the lighthouse strategy, a disciplined approach to observing liquidity, structure, and probability in the market. Remember, your job is not to find trades, your job is to observe the market until it reveals one. If the market has ever felt random to you, like price just moves and you are always reacting late, it's not because trading is confusing, it's because you don't see what price is actually moving towards. And until you actually understand that, everything you do will feel like guessing. So, I wanted to make a slide, a presentation, because most beginners are taught to see the market like this: support, resistance, levels, reaction. But that's honestly surface level. Price is not reacting to levels, price is moving towards orders. And those orders are what we call liquidity. So let me go to my screen. Okay, I made this for you guys. Okay, so I hope that you like it. If you feel the need to screenshot, please do rewatch this video, practice after this video is finished. Okay, because I took my time and I put this together for us. Okay, you hear that I said us because I rewatch my videos to learn as well. But back to liquidity. So let's define liquidity. Liquidity is simple. It's a collection of orders sitting in the market. These orders come from stop losses, pending orders, traders already in position. So when you see something like equal highs, equal lows, that is not just a pattern. That's a pool of liquidity. Okay? So let's go ahead and get started. Okay, so like I was saying, here's some misconceptions. People think that resistance and support are just the term. This two words, or these two words, are retail trader vocabulary. Retail traders are you and I, okay? People who actually move the market call resistance the top line, which you will see. Okay, you know me, I'm a visual learner, so I give visual things. Just stay with me, okay? So the top line, we usually call it resistance, but the people who actually move the market, they call themselves smart money traders, okay? They call the top line buy side liquidity. So you're going to see a whole lot of buy side liquidity, but you may know it as resistance. We've grown that vocabulary today. Now, on the other side, support. People think the bottom line is called support, but the smart money traders call it sell side liquidity. Okay, so here's the truth: the pools of liquidity are just clusters of stops. Okay, they're just sitting in the market. So let's continue to dive in. Okay, so liquidity. I already told you, I already introduced the vocabulary before the slide. So here we are: buy side and sell side. Just think of liquidity as visible targets. So targets as you want something to go to another place. So here is a top line. Oh, I didn't even know I could, girl, didn't even know I could do that. All right, so you have the buy side liquidity, which is on the top, and also the sell side liquidity, which is on the bottom. The reason why I marked up these two areas is because you see that the market at some point did not rise higher, okay, did not continue. Then towards the sell side, the same thing, but the opposite. It did not continue to go lower or sell more until the liquidity happened. But we'll dive into some more. And to just integrate what I was saying and to go a little bit deeper, think about the buy side liquidity as stops being there, like your stop losses, and your sell side liquidity. There are some more stop losses in this area. Okay, sitting above it on the buy side, but sitting below it on the sell side. Okay, and now let's change the question. Not where is support and resistance. Okay, that's not what I want you to be asking yourself anymore. Instead, ask where are traders positioned? Where are the traders' stop losses at? Because remember, the smart money traders need liquidity, which is money, to move the market. Okay, that was your first question. I'm going to repeat it again so you can get it. Your first question is, where are traders positioned? Number 2, where are stops sitting? Above the buy side and below the sell side. Okay? Because once again, the market does not move randomly. It may look like it to a beginner, but through practice, you can start seeing the patterns. I'm teaching you those patterns, but slowly, through steps. The market moves from liquidity to liquidity. That's all you really need to know right now. You're already above the true beginners, just with that knowledge alone. Okay, let's continue. So again, here's just some extra notes you can screenshot about the buy side and the sell side, how the buy side is found above and the sell side is found below. Okay, screenshot that. I'll give you a few seconds. All right. So again, price is not random, which I already talked about. Go ahead and screenshot your notes. Perfect. Okay, so what price is doing? I bet you just asking me, like, Kelsey, okay, you're telling me all this buy side stuff and this sell side stuff, but what is price actually doing? I'm still not understanding. What it's doing, again, is targeting liquidity. Okay, so how to move it? Identify the pools. The pools are basically, where are the stop losses? Where do I see equal touches? A lot of touches in the top side, which we called the buy side liquidity, and then some extra touches on the bottom side, which we called, and we named it sell side liquidity. Watch how the price approach. Okay, so here's a little bit closer so you can see it. So if you're super new and you don't know the direction of the market usually moves from horizontally, basically, so from left to right. So I added the line to show you guys how the flow is. Okay, so basically, here's some equal touches here, and then a few on the very top line. For the sell side, we have a touch here. It touched the line here, and then it finally broke out here. So that's what I mean with equal highs, touch, 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 and equal lows, touch, 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 and then finally break out. Is equal because it's basically at the same level. I just wanted to be super clear with that. Okay, so now just watch this carefully. Watch how price isn't just moving up. They are trying to target the liquidity. Okay, prices approaching the highs, prices approaching the lows, liquidity gets taken. Finally, then price reacts. Some people may think that, oh, okay, so it finally broke out, it's going to sell. It sold a little bit, It sold a little bit, but then, as you can see, it started to go higher. And then remember, this is not a random movement. This is very intentional. Okay, so now that we did the surface level, let's talk about the why. Why does this matter? If you don't understand liquidity, the market will always feel unpredictable. You will feel late, you will keep guessing. But when you understand liquidity, you start to see targets, you start to see directions, and then most importantly, you slow down. You start waiting and you don't react. So, what happens next? After the market finally tries to get the stops, they get the money from the above buy side liquidity. Okay. What happens next? Or from the sell side liquidity, what happens next? Okay. Because right here, you literally see. And then sometimes the stops does not go even past this. I just stretched it out so you can see it visually. There is a lot of money down here, and then even down here, because why would the market want it to continue going lower? And if you look at towards the left side, if you just try to stretch, the market really could keep on going until this area before it wants to pull higher, okay, to create um, a uptrend. It really could. Okay. So basically, price sweeps above and below because it's trying to get all of the stop losses or the stop orders. Because the reason why this fuels, think about stop losses as fuel. If you have a car, and well, it doesn't matter if you have a car or not. Okay, just think about how you pour gas into your gas tank in order to, drive. Well, think about the market as the driver, as the car. It cannot go to higher highs or lower lows or to whatever direction that it wants to go unless it has the gas. Well, the gas, okay, are the stop. They're coming to the gas station, which are where the stops are, and they're filling up. They're fueling up, and then they're going to leave. So that's just a quick little analogy. I hope that helps. Now, the mistake, because I don't want you to make the mistakes that I've did, especially in the beginning. Okay, so what beginners do, they see the market. They see the market and they think, okay, oh my gosh, the market has finally got out of this consolidation. I finally learned consolidation, and I know when it breaks, I want to be the first in it because I just know the market's going to give me this is like my trade to get out of my situation. I'm going to buy and get all this money. So so sorry. I meant sell and get all this money. Okay. But what happens is that the market is using this area to take what? Well, to get his fuel to make the true move. And then here, same thing on the sell side. Some people will think, okay, I also I study a little extra. I know when it's at the lowest point of what the price is, I want to buy because basically it's at the cheapest moment. And they want to buy there. And then the market's just using this as an area and to continue. But at the same time, the market doesn't give you the exact formula. It may give it to you sometimes, maybe never. You just never know. The market is not always predictable, but you can learn through time. What are some patterns you can recognize? What are some of your sequences that you see in the market? Some of the evaluations that you know that may happen through experience. Okay? So make sure you screenshot this and use this. Okay, or even if you don't know, but one thing about me, I love to give you I like a tool to use and to have as your identity. So from now on, before you think about entering a trade, you must ask, where is liquidity? Which side is likely to be taken next? And if you don't know that, you don't need to be entering the market. You don't. You need some more time, and that's okay. Here's your takeaway. What you should do this week. You are training your eyes. So do this. Mark equal highs, mark equal lows. Then ask, who is being targeted? That's your work. And remember, this is not just about liquidity. This is training how you see the market. If you can slow down and identify where liquidity sits, you are becoming a trader who thinks before acting. So let's go ahead and look at a real chart. A real chart so you can see it exactly. And from those pictures that you've seen, I took them from this exact moment so that you can have congruency and you won't be confused. So here is how it will look on a real chart. It's not perfect, but at the same time, if you're looking for perfect, you should not be trading because the market is not perfect. And I'm just showing you like the movements. Okay. So as you can see, hold on, let me just go to the left side. So as you can see, the market was selling and then had a pullback and it's still trying to find some structure until it entered here in this area. It bought up until it could not break anymore. And then you can see how the candles were a little bit bigger, but then it started to consolidate, get smaller candles. These candles are not strong at all because the buyers are losing strength. So the market ended up selling more. It took the liquidity. Do you remember? It took the liquidity here. Most of the beginners would have wanted to enter, and then they took it, and now they even went lower. That's an even deeper liquidity sweep to make sure whoever was down there who was trying to buy, oh no, I'm gonna get your money real quick before I make my true move. And this is where the current market is. It went back, it entered into the consolidation zone again. Okay, trading does not start with entries. It doesn't. It starts with understanding, and understanding starts here, liquidity. Price does not move randomly. Remember that. That's your gem. That's your takeaway. Price does not move randomly. It moves with purpose, and that purpose is liquidity. I hope that you enjoyed this video. I hope that this has helped with clarity in how the market moved. Please comment below one thing that you learned today. I would love to, see or just read it, and have an amazing day. Make sure you practice on the chart and apply all those screenshots or rewatch this video again. Thank you so much, and I'll see you next Thursday.